Hello and welcome to the webinar. Today, I just want to do a quick introduction to why we're all here. It's to cover the practical ways that we want to help our clients manage their Scope 3 emissions and their reporting to IFRS. As part of this webinar, just a little bit of housekeeping. There's a number of attendees on the call today, and we want to give as much opportunity for people to ask questions. So your questions will be monitored through the chat. If you want to post your questions there, we will cover it after each section. The session will be recorded, and we will share the link, the recorded link with you. And also at the end of the session, we will email you a little bit of a short survey after the webinar to get your feedback. The speakers for today, we have Olga Rivas, who is the ESG Cluster Technical Manager of LRQA. Olga has over 25 years of experience advising businesses on their environmental, energy, and health and safety strategy. This includes high-level engagement with senior stakeholders in businesses, multinational companies around climate change, energy, sustainability, verification, and reporting. We also have Davina, who will be the lead verifier and lead auditor for LRQA, who has over 10 years of experience across sustainability and carbon emissions. Davina has worked with multiple companies in civil engineering, manufacturing, building, and construction, as well as the services sector. She was lecturer for the London Civil Engineering Society in Westminster and has worked in different regions such as Bangladesh and China on multiple sustainability projects. And last and not least, we have Katie Udall, who is the Director of Sustainability Consulting in APAC. Katie has over 15 years of experience in the sustainability industry, most of those consulting with clients to help them solve problems around sustainability, climate change, and modern slavery. She has advised clients across multiple sectors and supported them to align with emerging sustainability-related disclosures and due diligence, regulations, guidance, and best practice. So welcome to everybody and welcome to our speakers. We are going to quickly do a quick introduction as to what were the feedback and results of the survey that was sent to you. We know our clients in this current environment, and those that are on the call today are at different levels in terms of the exposure to IFRS and Scope 1, 2, and 3. However, the biggest challenges that we recorded as part of the survey that was conducted was that businesses in Australia, more businesses in Australia, nearly 60% of the respondents mentioned that the biggest challenge that they had was around inadequate resources or established processes within their organization to sustainably manage this ongoing. So we've included a little bit of information, an introductory session to get you started on that particular challenge. We also know that a lot of businesses need to report to IFRS. So Katie, towards the end of the session, will cover some of the key things around IFRS and also touch on some of the challenges and answer your questions. So without spending too much time on an introduction, I would love to hand over to Olga Rivas, who is going to take us into our first session. Thanks, Olga.
Thank you for the introduction, Deborah. Hi, everyone. I am excited to be here with you all today. I hope we can make this session as interactive and informative possible. At LRQA, we understand that you are navigating the complex landscape of sustainability and climate change. So there are many topics to cover, especially when it comes to the challenges of the Scope 3 emissions. This short presentation isn't about explaining what Scope emissions 3 are. Instead, we are going to dive into some of the most relevant questions that you all submitted before the session. And don't worry, we'll have time for more questions at the end. So let's get started. The questions that we have selected are as follows, the ones that you sent. The first question is about how to approach calculating emissions for a multinational and multi-regulated organization. The question is, what is the best way to start to calculate your emissions in a multi-regulated and multinational environment? The second question is about a common issue in the Scope 3 accounting, that is balancing completeness and accuracy principles The question is, how would you handle a situation where your organization lacks complete or accurate data for scope-free emissions? The first question is about the availability of data. You have primary data for the scope 1 and 2 emissions and some categories for the scope 3, but not always for the supply chain, for the suppliers. So the question is related with suppliers' data are acceptable. And the last question is about the baseline year, especially when there are things as acquisition merger or demergers. So the question is related with the implication of these acquisitions, mergers or demergers in the baseline year. Let's go to the next one, please. Let's dive in the first question. If you can pass to the next, okay. Okay. So the question is, what is the best way to start to calculate your emissions in a multi-regulated and multinational environment? To tackle this, you need to start by establishing a clear context. We need to report your goals, frameworks, standards, and regulation in a unified and unique way. This means that we shouldn't create different reporting methods for each one. This means doing a bit of homework upfront to understand all these goals, reporting frameworks, standards, and regulation. So let's break it down. First, your goals. For example, the science-based target, it says reduction plans to ensure that we meet the goal of keeping global temperature rise below 1.5. So you have to dive on that. There are some questionnaires, there are some granularity requested. So it is important that you have a look if you want to report in this, if you have this goal. For example, in relation to the frameworks, if you are reporting in Australia, it's possible that you are using CDP, the Carbon Disclosure Project, and also TSD. So you should consider this in your methodology of, for example, the Global Reporting Initiative for Sustainability. In relation to the standards, in Australia, I think that you are using more GSG protocol, but for example, you have to take in account the ISO 14068 for carbon neutrality, and don't forget the PAS 2060 which is a guidance, but it has a lot of good tips for your implementation of the carbon neutrality. And finally, the regulations. For example, this part can get a bit tricky because it depends on where you are operating. For example, if you are operating in the US, you might be affected by the regulations. Or, for example, one important is the CBAM, the carbon part adjustment mechanism. Because if you want to import some product like steel, cement, or chemical products in the European Union, you have to meet the requirements of the CBAM. LRQA is working on that. We are making advisory pre-verification and verification of this regulation during the 25 pre-verification, and in the 26 we will start with the verification. So to sum it up, start by getting a holistic view of your goals, frameworks, standards, and regulation to achieve this unique methodology for reporting. No report for each request that you have, for each framework, for each standard in a different way. Okay, let's go to the next slide, please. So let's go to directly to the scope 3. No, the question is where to start with the scope 3 emissions. No, talking about these principles, accuracy, and completeness, which often are more important. No, especially with the supply chains data. To start, our first tip is that you have to use the best available data, and if you don't have this accurate available data, make reasonable estimates where necessary. Having complete data, even if it is estimate, is the first step. Remember that this is a long-term journey, and it is very frustrating to see emissions increase year after year simply because we didn't include all the sources due to our reluctance to make these data estimates. We also understand that achieving high data accuracy is something that can happen in one shot. Therefore, we need to prioritize improving data accuracy by considering important criteria. Essentially, there are 3 criteria to make these prioritizations. The first is classify the sources based on the percentage of emissions they represent in the total footprint. The second is the potential for reduction in these sources. And the third, it is related to your business opportunities. So to sum it up, the first tip is start with the best available data, use what you have and make reasonable estimates where necessary. It's better to have a complete picture, even if some parts are estimated, than miss out significant source of emissions. The second tip is that this is a long-term perspective. Understand that this is a marathon, not a sprint, and incremental improvements in data accuracy over time are key. And the last tip is prioritize accuracy gains, focus on the sources that represent the largest percentage of your total emissions. So following this steps, you can ensure that your supply chain data will be both complete and accurate, setting a solid foundation for your climate efforts. Let's go to the next slide because I think that an example is much easier to understand. This is an example for a drinks company, for the scope 3 of a drinks company. So here in the material source volume, we have included all the sources ordered by size. So let's say that in this company, the first it is the packaging, the second in the scope 3, the second it is the raw materials, the third product logistic, and the fourth the raw material logistic. No? So we selected the first one, that is the packaging, and go to the purchasing department in order to understand better what we are talking about. No? So go there, and in the purchasing department of packaging, we see that we are buying glass, boxes, steel, and plastic. And here we will order again by volume, and we look for the opportunities of reduction. So in the volume, it could be similarities, but for example, in the glass, we know that it is easier to reduce the emissions because there are not a lot of suppliers. There are a few suppliers that are providing us this glass, and they are taking some actions in the different sites. Okay, so we select the glass and go to the technical points of the glass. No? So let's say that the technical in these emissions, it could be the glass characteristics and the bottle weight. In relation to the bottle weights, for example, there are these bottles are quite optimized in the sense that, for example, for the beer, for the Cokes, or this kind of drinks, there are these bottles are quite optimized. They are using this kind of models during time, so the opportunities are not so big. So we will focus on the glass characteristics using the supplier datasheet. And which are the things that we have to work with the supplier? It is important to know the site-specific emission factor and, for example, the percentage of recycling that is included in this glass, and some opportunities like bottles deposit return. So this is like the way to go, prioritizing this accuracy in order to count this data and to can make this reduction working with the suppliers. Okay, let's go to the next topic that is related with the data validation steps. Now we have our priorities of whom to request data from. So let's focus on assessing the validity. The validity of the suppliers' emissions to have this accurate scope 3 accounting. So we have include here one approach. No? The first approach, the first step is related with data collection. We have to engage with suppliers. We have to obtain data from suppliers, and we can start using a standardized questionnaires and surveys to collect GSE emissions data. We have to ensure that these questionnaires align with recognized frameworks like the GSE protocol, and it's also important to ask for the calculation methods they use to ensure consistency and accuracy. When we have received the data, we have to validate to verify the verification of the data received. If they have a third party verification, it is quite good because we are sure that these data are accurate, complete, and so on. So we recommend that encourage or require your suppliers to have their ESG emissions data verified by independent third party, because this adds credibility to the data and ensures that it meets the necessary standards. If they don't have it, you can do cross-check data, that is, compare the data provided by your suppliers with industry benchmark or with the other available data that you have from the other suppliers, so you can identify any discrepancy and ensure that the data is accurate. In the third point, is quite important, the training and engagement of the suppliers. You have to educate the suppliers. It's essential to educate your suppliers on the importance of accurate ESG reporting, and you can provide some training on how to measure and report their emissions. It is important to use one standard that is recognized, like ESG protocol. For example, normally is done by supplier focus meetings or forums that you can include training sessions. Other companies develop training programs that they cover the basics of the ESG accounting and the tools and methodologies that you are using for data collection. You can assure in this way that your suppliers have a clear understanding of what is expected. You have to prepare some resources and support for this training, like guidance, templates, or access to your carbon accounting tools to help suppliers accurately measure and report their emission. And at last, it's quite important to have regular communication to keep informed about updates or change in reporting requirements. The objective is to get this consistency and transparency with the data. So you should do regular reviews of the data, looking for consistency, completeness, accuracy, relevance, and transparency. And it is quite important to maintain open communication channels to have this communication with your supplier to discuss any issues of improvement. And finally, also, it's important to carry out data quality assessment of the data with, for example, annual audits. For example, in the example that I mentioned before, normally they did by class, no? For example, the plastic suppliers, the PET suppliers, or the different kind of suppliers make this kind of audits in order to gain this consistency in the data. And also it's important the feedback mechanism to provide feedback to the suppliers on the emissions. So following these steps, you can ensure the validity of your suppliers' ESG emission data and making your scope-free accounting more accurate. This is a structured approach. This is you can find some information, for example, in the ESG protocol. And not only this approach enhances the data and integrity and fosters a culture of transparency and continuous improvement within your supply chains. So let's go to the next slide, because you can see here like a resume of that. You can see here the different levels of quality suppliers emission factor. For example, we can start with the emission factors from the commercial database, for example, like EcoInvent. These are good, but they are based on global data. This is not specific from your supplier. It is, let's say, an accurate data, but it is built with all the data of all the factories or industries in this sector. So it is, let's say, quite generic. In the second, we have one with a bit more accuracy, that are the sector-specific emission factors. There are, for some sectors, guides, and in some cases, they provide values of these emission factors. In the third, we have a more accurate level. Is when your supplier gives the specific data, but they should include methodology, that it means assumptions, which sources has been included for the whole organization. This is for the whole organization, not side by side. One step further is when they provide emissions factors by site at installation, and the highest level of accuracy is when the organization has third-party verification. And the last question, it is related in the next slide, it is related with the importance of the baseline years. If you can go to the next slide, please. Because we want to emphasize the importance of the baseline year. When calculating scope-free emissions, typically, we want to have a reduction commitment, for example, the 30% reduction by 2030. And this is where the baseline year, the year of comparison, becomes crucial. So, recalculating your baseline year involves adjusting historical emissions data to reflect change in your organization. This ensures that your reduction targets remain meaningful and accurate. So we recommend use the GSD protocol guidelines for this adjustment, and clear communicate this change to all the stakeholders to maintain this transparency. In relation about how to address baseline recalculation in an organization following mergers or acquisitions, you know that the structural change such mergers and acquisitions or demergers can significantly alter the inventory of the scope-free. First, so how to manage? First, we will try to obtain the carbon footprint data for the same calendar year of your baseline year, but sometimes this is not possible because the data was not initially collected for these new sites. So we will include the emissions of the new organization for the first reliable year, but this should be communicated to when you are reporting this data, indicating this circumstance. So this baseline year can be composed for emissions from different years as long as this is communicated. So I think that that's all. Thank you. And I hope that you find the presentation helpful. So I am open to questions and pass to Davina.
Thank you, Olga. Hi, everyone. So I will be walking you through the verification of the carbon emissions, right? I've also got a nice little Excel put together for scope 3 emissions, which will go afterwards after these slides, okay? So the process of verification is a complex activity carrying with it potential liabilities in relation to both money and reputation. This is why verification needs to be undertaken against a set of guiding principles by competent individuals and in accordance with a defined process. Verifiers will always go by the fundamentals of professionalism, honesty, impartiality, and confidentiality every time they face a verification, regardless of the criteria being applied. So verifiers have to comply with the requirements of the ISO 3000. Can we go to the next slide, please? Yeah, thank you. All right. So LRQA conducts verification in 2 stages. Stage 1 usually spans from 1 to 3 days and is shorter than the stage 2, which can span across any number of days depending on the requirements of the verification. It is very much an evidence-based process. A range of interviews will be conducted, various relevant information will be reviewed, and the necessary data set will be analyzed or replicated as needed. So as mentioned by Olga as well, during the verification, 6 critical principles are taken into consideration, which are completeness, accuracy, relevance, consistency, transparency, and conservativeness. Next slide, please. During a Scope 3 verification, we will look into the emission categories, which can range between 1 and 14, and then we will determine the significance of the Scope 3 elements based on their percentage emissions. This is what we refer to as the strategic analysis. We will then do a risk rating so as to ascertain the level of verification that needs to be applied, which can range between limited and reasonable assurance. Based on the outcome of the risk analysis, we then proceed to produce a sampling plan, which we are not allowed to share until the end of stage 2 completion. We then share the verification plan with the client, which details out how the verification will proceed during stage 2. Between stage 1 and stage 2 verification, the client is allowed a maximum break of 3 months. When these stage 2 verification commences, the information review and data analysis commences. Towards the end of the stage 2 verification, we will then issue the report and the assurance statement. Next slide, please. So both the client and the verifier needs to be clear on the terms of engagement. At the start of the stage 1 verification, the verifier will reconfirm the assurance criteria, which could be a range of standards, including internal company procedures. The verifier will also confirm the level of verification to be applied, which could be either limited or reasonable. The level of materiality is also confirmed, which in fact would affect the sampling plan. Next slide, please. So during the verification, a range of findings can be raised, which can be classified under a follow-up, opportunity for improvement, misstatement, non-conformity, material misstatement, or a material non-conformity. So any outstanding material findings can adversely affect the outcome of the assurance statement. Next slide, please. So as you can see from here, the LRQA undertakes different types of verification, including those against bespoke requirements. We have a website which you can explore, and it will be giving you a lot more details on each type of verification undertaken. So if it's okay now, I will basically be taking over the screen share to show the Excel. Just bear with me one moment, please. Hopefully this doesn't take too long. Okay, here we go. So basically, what I'm going to do is I will be demonstrating to you the Scope 3, overall Scope 3 emissions. Okay, so just bear with me while I toggle between the screens. Okay, so here you can see that the overall Scope 3 emission calculations have been consolidated. So we are looking into a fictitious scenario, which could have practical relevance to many of you on the call. So the company under consideration takes on different types of business activities, which I have been able to categorize under each of the 14 categories of Scope 3 emissions. Here you can see the calendar year of the year 2024 under consideration. and you're able to see the total emissions which have been summed up against each of the categories. Okay, so we won't be able to dive in to depth, okay, but hopefully it will give you a sense of how to put together some of the data, and it can have or may not have relevance to you, but hopefully it gives you a good picture. Okay, so we have here the category 1, which is the purchase goods and services. All right, so a lot of it is what data do you have available, how you're going to organize it, classify it, what activity data, all right, you want to work with. In this case, we've got the quantity, you've got the units, and you've got the emission factors as well. Okay, emissions calculations is pretty straightforward, all right, whereby you are multiplying the activity data with the emission factors, and depending on the unit, all right, then you basically have to convert accordingly. So there are a range of different types of methods that you can apply, right? We don't have to be really specific to one method. Again, it really depends on the context of your organization. We have the category 2, which pertains to the capital goods, all right? So again, it is over here, obviously, I've just given you a sample of what it might potentially look like, all right? So you might also be arranging the data according to region as well, all right, before we sum up the emissions, okay? And as you can see, then it actually then feeds the main summary sheet over here. For category 3, all right, we've got the fuel and energy related activities which are not included in scope 1 or scope 2, all right. So here you can basically, it's relating to the production of fuels and energy purchased and consumed by the reporting company. And that could pertain to different types of fuel being used, all right, the electricity being consumed. So we need to be mindful of the units, because sometimes you might need to apply a relevant conversion factor. That again depends on the unit of the emission factors. Also, sometimes you might have to apply more than one emission factors to calculate the emissions. Okay. Now for category 4, which is the upstream transportation and distribution. All right, so again, if you identify the various ranges through which the transport is basically happening at the upstream, okay, then you can start identifying, say, for example, the fuel volume being utilized, right? Again, identify your emission factors aptly, and also applying the well to tank factors, and then coming up with the emissions. So again, if you total up the emissions for category 4, okay, you can see that number there. That should then feed to this main sheet over here. So category 5, which is the waste generated in your operations. Okay, so basically that pertains to the third-party disposal and treatment of the waste generated in the reporting company's owned or controlled operations in the reporting year, okay, which can include disposal of both solid waste and wastewater. So as you can see, again, there are a range of methods that you can apply, right? And also the different type of activity that can be taking place has also been shown over here. Category 6, business travel, which can be quite voluminous in terms of the activity data, right? Usually there are big Excels to be dealing with, but we have a very simplified scenario over here. So based on your business areas, okay, the emission type and the emission detail, and then we've got the activity data here with the emission factors. Again, obviously the verifiers will be looking into whether the latest emission factors have been applied to your emissions. Okay. Going into category 7, which is employee commuting. All right. So we have basically a range of activities identified here, and the units as well, again, coming up with the total emissions for this section. So employee commuting, again, can be based, say, if you are conducting a survey organization-wide to understand how the employees behave when it comes to commuting. There are also some online available data which can help you with the initial estimation. But generally, as Olga has mentioned, it's just that having that tenacity that over the years, all right, to go away from the estimation and to be portraying more actual set of data. So category 8, we've got the upstream leased assets, all right. So that's basically the assets that are leased by the reporting company, all right. Again, as you can see that the relevant emission factors were applied before the totals were done. So in a similar fashion, we also put together the downstream transportation and distribution as well. This is basically having, you know, the identifying the mass of goods sold, all right, and it can be actually traveling not just one distance to one site, but it can be actually further traveling down from site A to site B, and there could be potentially more. But then you're adding up the total distance, okay? If you need to apply a relevant conversion factor because you need to convert it because the emission factors happens to be applying to miles-based activity data, then you do that. And as you can see, basically, then you can put together a formula within the Excel to calculate the emissions. So this way, the data management is less arduous. But of course, there are various types of GHG platforms online as well, okay, which you could utilize to have a more efficient data management when it comes to the GHG inventory, okay. So, but then we have the category 10, okay. So here basically we want to look at the processing of these sold products, right? And we have to be a bit conscious of the fact that we are dealing with the intermediate products. And so for example, over here, we've got a range of companies, A to E, all right, identifying the fuel they have consumed, the electricity they have consumed, their waste output, and then identifying the relevant emission factors. And then again, it is how you want to tie that all up to basically generate the emissions. So during the when you're basically having that GHG inventory coming up into a picture, it is then deciding how you want to use that collected data, what methodology you want to apply, all right, so as to generate that emissions. So for usage of the sold products, all right, so we again break it down to direct use phase emissions and indirect use phase emissions, okay. So this will basically be pertaining to the scope 1 of the users and the scope 2 emissions of the end users. So we don't have to do everything entirely from scratch. Please look at the companies that you are working with. They have their relevant emissions, which then you can actually basically put it into your picture as scope 3. So we don't have much. We're going to be.
Yeah. Just really quickly, we're running out of time for the next session as well. Can I ask if there's any specific category that you want to sort of cover in terms of a key point in relation to scope 3 where most companies might struggle to get this data? from their suppliers, and any specific sort of point that you would like to cover before we sort of jump into Q&A, just so we give Katie the next session.
Yeah, absolutely. Definitely. So, so I think what I'm going to leave it with is that part of the Scope 3 emissions is you can incorporate the downstream leased assets, franchises, as well as investments, right? So I think the key thing is to understand the nature of the organization, the context. You have to define your boundaries properly, and that basically then leads to the definement of the Scope 3 verifications. Okay, so thank you for that. All right, I'm gonna now open the floor for Q&A, and back to you, Deborah.
Yeah, so I'll get, thank you so much for sharing the screen again. Just really quickly, we have time for a couple of questions before we jump into Katie's session. I'm just checking to see if there are any questions. So I'll just give, all right. So question number 1, I want to get CBAM for my organization. What are the mandatory things that we should have in place? So I'm going to direct this question to starting with Olga, and then if the other two speakers want to jump in as well.
Okay, so in the CBAM, sometimes we think that is like the product carbon footprint, and there are some elements. So let's say that the CBAM is a regulated scheme that is like an annex of the UETS. So this type of regulations, first you have to identify the boundaries of the organizations that you are reporting. This is quite important, and you have to identify like the type of products and the percentage of the materials that are included in the CBAM in this product. And later there are like a very specific questionnaires that you have to fill with the specific data that you have to use. So the regulation of CBAM, let's say that is published, it is public, and you can see there. We have some trainings in relation with that and these pre-verifications. So let's say that this is not sometimes it is thought that it's like the product carbon footprint, but this is not based on the ISO 14067 or the ESG protocol for products, but it's not in this way. It is like a regulated with some topics to cover, very related to the organization, the product, and some questionnaires that you have to complete in to do that. This is for the way that you have to report in. So far, it's not has been published. It is expected that it has been published before September of this year. The verification regulation that applies to us, that is how are the things that we have to check specifically, and in this moment we have the complete view. But the important point is that you take the, let's say, the regulation and go to ahead and try to understand, and later you can make a gap or gap analysis with a expert verifier and so on, in order to give you to how to fill these parts with the level of accuracy that is expected to have this 5% of reasonable assurance that is requested by the European Union.
Awesome, thanks, Olga. I think we have some questions, but I think what we'll do is we'll start with the next session. So I will call on Katie to start off, and we will have a few more questions at the end of this session. Over to you, Katie.
Great. Thanks, Deborah. Hi, everyone. So yeah, if we could go to my first slide, please. I'm going to kind of zoom out, but also zoom in at the same time. So kind of zoom out when it comes to talking about carbon reporting and the kinds of requirements that are needed. It does go beyond collecting your GHG emissions data only. So I'll talk about the kind of everything that's needed as part of the carbon reporting requirements, and I'll zoom in and the fact that we're going to talk about specifically about the Australian sustainability reporting standards. So these have been finalized. They were finalized on the 20th of September 2024. They consist of 2 standards which are very closely aligned with the international, the IFRS sustainability disclosure standards. So if you're already familiar with the IFRS, then you'll be very familiar with the AASB S1 and S2 standards, which are specific to Australia. So there's two standards. So the AASB, which is the Australian Accounting Standards Board, has taken a climate first approach to adopting the IFRS standards. So what this basically means is, of the two standards, the first one is very closely aligned to IFRS S1, which talks about general requirements for disclosures, sustainability related financial information. So this is sustainability across the spectrum of different sustainability topics. AASB S2 focuses in on climate disclosures specifically. So again, this is this is a climate first approach that the AASB are taking. The first standard, the one that covers general sustainability related disclosures, is voluntary. The second one, S2, the climate related ones, is mandatory. So this is the one that you need to focus on first and primarily. Okay, next slide, please. When do they come into place? So they come into place essentially now. They already have in a phased approach. So essentially, the standards will begin to be mandated by larger organizations first. So we've got Group 1, Group 2, and Group 3 companies. So companies that with the Corporations Act Charter 2M reporting obligations that meet the thresholds that are up here on the screen will need to start reporting on their climate disclosures. So first, the first reporting period for Group 1, which is the larger organizations, actually starts on the 1st of January 2025. So what this means is this reporting year, if your reporting year is beginning of January to end of December, this is your first reporting year. So you need to, come the end of this year, your next annual report after that, which will be around 3 or 4 months after the end of the financial year, will need to start having climate disclosures as part of that report. And so essentially what that means is your first climate disclosures will need to happen within the annual report that is released around March, April 2026 for Group 1 companies. If you're a junior end, 6 months later. But the period of time for your reporting is right now. So it's for January 2025 to December 2025, or June 25 to December, or to June 2026. I hope that's clear. It's a little bit, takes a little bit of thinking to get your head around it. But this is, like I say, a phased approach, and it's really
So I think Katie's video is frozen. We'll give it another minute or so.
Okay.
That's okay. All right. Well, let me just quickly check and make sure that internet issues, as always, perfect timing. Gives everyone a bit of a break. Let's tackle some questions, hey? Let's jump into some questions. So whilst we're waiting for Katie to join back, and hopefully she doesn't join back and starts talking at length where she left off, but I think one question that we have is obviously getting supplier data is a bit of a challenge, right? So if you look at the supply chain from, let's just say, manufacturing or services, for example, what would you recommend as a starting point to communicate this with suppliers, and what is best practice? Have you seen this being done with organizations currently? So, what is best practice? Is this currently being done? How do you get your suppliers to comply with this requirement?
I think
Okay.
Olga.
Okay, so the first point, let's say that it depends a lot of the size of your company, the importance of the supplier. So the first thing is that you have to establish a clear framework. Let's say, identify, as we include in my presentation, which are the important ones, which is the percentage, which ones you can collaborate, and so on, and understand as a whole. And later, depending on that, there are companies that have, let's say, very suppliers that contribute a lot on the percentage, and they are working specifically with these suppliers. For example, imagine the example that we have included in the presentation, a drinks company. Packaging is important one, and they classify by types, let's say, PET suppliers, glass suppliers, and so on, and try to work with all of them. There are, in the service sector, it is more important as there are a lot of suppliers and it is quite difficult to communicate one by one with the suppliers. It is better to create like a platform or to create like a trainings to make more online how to collect this data. Although it is important to have a clear communication channel with them, but if you are working with a big number of suppliers, it is better to prepare some modules that they carry out and only discuss more about the different topics. No? For example, this is made by the services companies, and also, for example, by the factory cars. You know that they have to let's say they have committed 0 emissions on the cars in the 2037 now. So it means that the car is electric, but also that all the parts of the car are 0 emissions. So they have to work with these suppliers one by one by the different type of the parts in order to get that. So it's a mix of a platform in order to collect the data, and this working specific for its kind of suppliers. It's quite important engage and educate the stakeholders and standardized data reporting. I mean that if you are using the GSD protocol or the IFRS S2 or this, it should be clear and it should be consistent, because if not, you cannot aggregate the data. So it could be, we have to use a very clear methodology and implement continuous monitoring, verification, and audit in order to know applying the principles that Davina and myself mentioned about consistency, accuracy, and these kind of things. These are the main tips in my experience.
Okay, Davina, you want to add anything to that before we go to the next question?
No, so I think it's also it depends on the situation of your integrated business management systems as well. You might already have an existing supplier base, which is in the approved list. Better to start there. And communication is because you might have suppliers like tier 1, okay, and then you might have tier 2, tier 3, etc. suppliers as well. So I think, like Olga has mentioned, I think that chasing and refreshing the communication on a regular basis and keeping up with that frequency is very important. And as you'll see, basically that trust also builds up, all right? And the communication, you will see that gradually it starts from one way, but then it becomes a two-way thing, whereby then you start learning from each other in terms of the best practices that you can adopt and apply.
Okay, thank you. One more question here on the same topic. Is this particular job for collecting your Scope 3 emissions and dealing with your suppliers, does this sit within procurement? Does this sit with your sustainability teams? How do you, or what have you seen that works best in terms of integrating this into an organization and making sure there's some consistency across engaging your suppliers across the business? Maybe you start with Olga and then Davina as well.
Okay, so at the beginning, especially with the scope 1 and 2, it is let's say the law is more on the sustainability department. But now, for example, we have some companies, because the important point is that this department, for example, the purchasing department, have their own objectives of reduction, and that it could be vinculated with the bonus or these kind of things. This is the point where the areas take the real responsibility. At some point, for example, for the scope 3, for these companies that are applying that, we have contracts of the scope 3 that are made by the purchasing department, not by the sustainability department, let's say. And this is the way of the maturity, because it is impossible that the sustainability department give the validity of the primary data and to engage to the suppliers, for example, because this will be with the department that is managing the supplier and this data. This is the key point where the system, where this reporting is, let's say, gaining the maturity and gaining the reduction results and so on. So let's say that is a progressive way, because you have first, the sustainability department has to train to the internal stakeholders, to the internal interested parts, and later these interested parts are deploying to the suppliers and the other organizations that they are in contact.
Davina, you want to add anything to that before we have one more question?
Yeah, no. So basically, I think, you know, at some point there needs to be interaction between the procurement team and the sustainability team. So it's definitely teamwork, all right? Definitely the activity data will be more or less coming from the procurement side, and then the sustainability team will be bringing their expertise in terms of scoping that emissions. So definitely teamwork is necessitated. And again, if I can reiterate the point that we have mentioned, is that third-party verification, all right, is whereby then, you know, if you have the inconsistencies or discrepancies, and those become identified and resolved. All right, back to you, Deborah.
Thank you very much. Another question around reductions. With your scope 3, what are some key areas to target for the biggest amount of reductions? And then we'll go back to Katie. Thank you so much for joining.
So sorry, everyone. That's never happened before, but yeah.
Well, we can jump right into it. We have one more question. What's the largest dent you can make to your scope 3? How do you, what category or what area would you target with your suppliers in order to get greater reductions in your emissions factor?
It
Does that
depends
make
a lot of, yes, it depends a lot
So
of the sector. No? It depends a lot of the sector.
Yeah, Olga, yeah.
Okay. Yeah, I mean that it depends a lot of the sector, no? Let's say, for example, the chemical sector or cement sector, the scope 1 and scope 2 is quite important. But for example, in a company that, let's say that in the majority, there is a very good report in the CDP in relation to that. For example, a food company, or it's the 90% is scope 3, and in this scope 3, the 35% or 40%, it could be purchasing goods and service purchasing. So this is the point for this type. It depends a lot, but there is in this, let's say in this CDP, there are some, let's say, information aggregated for sectors and the different weight of the categories, and you can make the audience can make a benchmark with this data in order to know if the data are consistent with that.
Good, Davina.
Okay, so yeah, so to add to that, basically, so I think we need to take a look at that summary scope 3 emissions, a sample of which I've also shown to you. And then basically from a pie chart representation, then you begin to see, okay, where is most of these scope 3 emissions happening? So of course, if you're combinedly looking at scope 1, 2, and 3, usually you'll find that scope 3 emissions is actually the bulk of the overall emissions. So when you actually hone in to a particular category, and that's when you probably need to apply your mitigation measures, all right? Definitely you need to set targets, but then you also need to basically break it down into what measures you're going to undertake so that you can meet those realistic reduction targets. Okay, so usually what companies do, they have roadmaps set out, okay, 5 years or 10 years or even more long-term goals, all right? But then just keeping a focus on those long-term goals in terms of carbon reduction is not sufficient, all right? You have to really break it down into, say, annual reduction targets, all right? And then you must have a very strong monitoring system as well to ensure that you're en route to meeting those targets as set in the roadmap.
Amazing, thank you. All right, on that note, Katie, back to you. We have obviously gone over time, so my apologies, but we will try and go through these slides and also get a couple of questions as quickly as it is possible. But I'll hand over to Katie. Thank you.
Okay, apologies that I'll cover the key topics. So if we could jump to the next slide, please. So reporting timeline, it started already. Group 2 companies need to be starting already. Sorry, Group 1 companies need starting already. Group 2 will be pretty soon. Can I have the next slide, please? So what do you need to be reporting? There's essentially 4 elements of your report. One is the governance. So how are you governing? How are you governing processes, controls, procedures that are being used to manage your climate-related financial risks and opportunities? What does that governance structure look like within your organization? The second thing you need to be reporting is what are your strategy and materiality assessments around that. We can there's a bit more information on the other slides. But this is essentially looking at things like climate-related risks and opportunities, climate resilient strategies, and transition plans. The third area is risk assessment, so looking very closely at your climate risks and your climate opportunities and how they will affect your business and what you how you intend to manage those risks. And then finally, metrics and targets. So we've been talking about GHG emissions accounting. How do you go about counting your scope 1, scope 2, and particularly scope 3 emissions? That makes up one aspect of the 4 areas that you need to be putting into your carbon disclosures. So in the first year, you need to be reporting your scope 1 and scope 2 emissions. In your second year of reporting, you need to start reporting your scope 3 emissions. Another note on this, you actually need to be getting your carbon emissions assured as well by a third party from year 1 as well. So that means your scope 1 and scope 2 need to be assured in year 1, and your scope 3 needs to be assured in year 2. I'll just jump across these because we're well over time, but governance structure, you do need, board of directors has a responsibility for climate planning and disclosures, and so there does need to be people at this level who can who take responsibility for that. Sorry, next slide, please, and then the one after. We also talked about risk assessment and management. There are a number of different ways you can go about assessing your risk, but essentially they all take three-step process. Identification of those risks. It can be physical risks, transition risks, and also opportunities. You then need to conduct a risk analysis to understand which of those risks are most prioritized to you, most important to you. Often we use things like likelihood, impact, magnitude of the risk, etc., to identify the most key risks for you. And then the third is to look at how those risks are impacting your financials. So how are they impacting your access to capital, cost of capital, things like your reputation, your dividends, and general operations. Next slide, please. Strategy and materiality covers aspects such as scenario planning. Yeah, next slide, please. Scenario planning, transition planning, which is important to understand how your business will operate within a different climate scenario. The ASRS actually asks for reporters to report on a scenario of 1.5 degrees and also 2.5 degrees. So they're specific about the scenarios that you need to report on. I don't know if the slides are moving. Next
Yeah.
slide, please. And the next one. Yeah, so metrics and targets we've talked about quite a bit already. Olga and Davina have covered that. But starting with scope 1 and scope 2 in your first year, and then scope 3 in your second year. And then next slide, the ways that we can help is with all of these different areas. We can certainly help with GHG accounting. So if you're not ready yet to be assured by Olga or Davina's team, in the consulting team, we can help you to put that GHG account together. We can help you to come up with the methodology for assessing that and putting that data together. We can then assure it, but we can't assure the same year that we've helped you to put it together. So there are certainly some restrictions around that, which we can discuss in more detail if anyone's interested. We can also help you with your climate risk analysis, you're putting together your climate strategies, and then of course putting together your climate disclosures. So if anyone is still here, happy to answer some questions.
Amazing, amazing. I think if an organization is very new to this, Katie, what would you say is the focus in terms of getting your reporting started? The inventory management side of things is probably, what would you suggest is the first few steps? A lot of organizations are not quite ready, especially with the scope 3. What would you suggest is a starting point where they don't have that assistance?
Honestly, you should start with something like a risk assessment and a gap analysis. So what are your current risks? What are the various risks that you need to focus on the most? So starting on the risk assessment, looking at your strategy. People don't start there. They tend to go straight for accounting, for accounting for their GHG emissions, although that's important. There may be some things that you can discover in the strategy and materiality assessment process that help you to streamline that accounting process later down the line. So I would certainly start with a risk assessment, maybe a very basic scenario planning, and then moving on to looking at your scope 1 and scope 2 emissions.
Okay, just checking for more questions. Do you, in your reporting, do you have to report to your targets? So the targets that you've set as an organization, and do you have to assure those targets and provide assurance around it?
You have to report targets, yes. I don't think they mandate which targets you need to use, but you do need to report both metrics, so what you're using to measure your performance, and then also targets where you aim to get to. Using something like science-based targets is very common. And then assurance is around the first couple of years. Assurance is around the GHG accounting and the emissions, and then later assuring whether you've met those targets or not. The claims that you make towards meeting those targets is also up for assurance too. Okay.
I think we will call it here. I think we did rush through the last section. However, if people do want a session, we can always organize a session with you directly. So please reach out. I just want to take this time and say thank you to all the speakers that put in the effort to present today. We've provided a lot of technical, a lot of operational guidance, but also very hands-on information on the reporting side of things, which we can also cover in a bit more detail if you're interested. So at this point, I would just say thank you for attending, for those of you that are still here, and we will call the webinar here. We will reach out with a survey to follow up on any feedback that you might have. Thank you so much, and I might just hand over to Shannon and Pallavi. Thank you.
Thank you, everyone.
Thank you. Bye.
Thank you, Deborah. Thank you, everybody. Bye-bye.
Bye.